World stock markets trying to hold on to a recovery that was pinned on hopes for an EU bailout for debt-ridden Greece, but that, of course, remains in flux. Will intervention help ease the problems, or is it too large to contain at this point? In New York, John Levy with the Eurasia Group joins us. He thinks the situation in the Eurozone is still will remain extremely volatile. And on the phone from Hong Kong is Marc Faber. He believes that a correction in the global markets is already underway. Welcome, gentlemen. Do you agree with that? And if indeed the correction in the global markets is underway, how much more does it have to go?
Well, basically, most markets or stocks are down approximately 10 to 20% from the peak. Some markets, like the S&Ps, may be down only just 8%, and others are down like 20% from the peak. But we are in a correction phase, and I would expect this correction phase to run further. Now, very near term, on a 10-day basis, the markets are a bit oversold, so we could get kind of a relief rally. But I wouldn't think that in February we'll see a new high on the S&P and other markets on the S&P above 1,150. In fact, I think the 1,100 level on the S&P is now quite a resistance zone.
Mark, would you buy Greek debt right now?
Would I buy what?
Greek debt right now.
No, I'm not interested in government or sovereign debts, because I think that all governments will eventually default, including the U.S.
Wow, really? Whoa.
All governments. Mm-hmm.
All governments, except some, like Singapore, that have basically no government debt and have huge reserves.
Well, a lot of people
in general, the problem is the emerging economies today are financially much sounder in terms of debt to GDP than the developed world, including the U.S., Western Europe, the U.K., and so forth. So I think the problem will really be in the developed world, and let me explain why. In the developed world, we have huge debt to GDP in terms of government debt to GDP and unfunded liabilities that will come due. And these unfunded liabilities are so huge that eventually these governments will all have to print money before they default.
About your catastrophic outlook, you know, you're the boom, gloom, and doom report, so 2 out of 3 are really negative. I just want to know, Mark, were you selling this kind of panic in March before stocks rose 60%, and did you miss out on that upsurge?
Actually, I have very good news for you, because on March 6th I was interviewed by Bloomberg, sorry to say that, and I said to buy stocks. And since then, the gloom, boom, and doom report has been very positive about stocks. But
that's really good to hear.
I'd also like to stress,
right,
because I'm so negative about government bonds, and because I think that monetization will continue, I'm relatively optimistic about stocks going up. They'll probably go up less than precious metals, but that's one of the safe havens.
John and Mark, we gotta carry this on at another time. Thanks very much.
Actually, I'm also surprised, and I mean, I was recently on CNBC, and when I mentioned that essentially the U.S. is bust and belongs into the same kind of basket as Greece, they right away shut me off.